Okay, welcome everyone to my stock market technical analysis channel. There's some really important things that are in this video. I think it's prudent for people to pay attention to. Obviously, whatever I point out is not trading advice and it's not financial advice. It's literally just my opinion and ideas, and so act accordingly. However, I think some of the things that I'm seeing in the charts are important to notice, and I will be positioning personally according to what I see in these charts. So we're going to start out. Before I do, though, please leave me a thumbs up. I do get some value out of that. That helps my channel grow, and I'll continue to grind on these charts if you guys continue to support my effort. So thank you. Let's get into triple Qs. All right, so I got this blue line. We have this secondary trend line, it looks like, on triple Qs, which you can see we had a couple reactions recently over the last couple days. So we put it in the secondary trend line. It's not well established. It's a very, not a lot of support, but it was broken today. So there's the breakdown of that. And we're just kind of drifting sideways. Again, the market doesn't want to... We don't have a catalyst yet, basically. So the market seems to be kind of drifting lower to sideways, but without some sort of catalyst, there's not a lot of realization, I guess, that the market wants to go lower. And that, I think, is expected. Typically when you have an uptrend, when that trend starts to reverse, sometimes it's not just all at once. Like instantly when the market opens, you just sell off and everybody realizes that there's a sell-off. No, typically the way it works is that it drifts lower gradually, so people don't really realize the trend is changing. And then all of a sudden, there's a moment of realization where you'll get some sort of a gap down or big move. I think this market's likely to have some sort of a gap down move. It's likely not going to give people an opportunity to just exit the trade during the market hours. The thing to notice on this Qs is the bearish rising wedge right here, and see the red, this wedge. So that was the pattern that was really in place since back in November. We broke that, so there's your sell signal. That's really the most impulsive selling we've seen, and out of that wedge pattern, breaking that support, and we haven't seen too much more impulsive selling for a while. So that was a sell signal, and coming back, we did a back test right up here of that trend line. This was your most objective area to take a short position, or I guess exit longs if you hadn't already. But that's come and gone, and now we're starting to drift lower. You can see we previously they did this rally right here, but it made a lower high than the previous high. So we got a lower high now, and also if you look at the low right here, starting to put in what looks like a lower low. So to me, this looks like a downtrend. I think it's likely we're going to head down to this 307 area, and then probably going to break that. You'll want to see the breakdown. That would be a sell signal if you got a breakdown, and then that sets us up to 298. Someone also, just to cover this, someone asked me in a comment what a sell signal is, or how to find a sell signal. Really what a sell signal is impulsive break of support. So if you have a trend line such as this one right here, you had no sell signal because your trend was established. Everyone was buying the dip right at the trend line support, which is where you should be buying. You want to go long at support, short at resistance. So people are buying, no sell signal, and then boom, you get this 1 hour candle right here, and it closed. You could have taken the trade intra-hour and just managed it, and if it gave you a whipsaw signal, cover and just get out. But it closed way down here. That's a sell signal. Break of support and impulsive. And if you look at the volume, good increase of volume right there as well. So that was your sell signal. Now, oftentimes when you get the sell signal, you're not going to just be instantly profitable. Sometimes, this one you would have been profitable a little bit all the way down to here, and then it does the kickback rally. So depends on your time frame that you're trading. If you're trying to swing trade, then this sell signal is just kind of the entry point for a starter short, and then you can look at adding to a short position on back tests or on further breaks of support. So again, here's another major support level right down here at 306 where we had several reactions. The next sell signal or potential area to add to a short trade would be a impulsive break of support. All right, so that's what you're looking for sell signals, and that is relevant across all time frames. When you look at the daily, you look for impulsive sell signals, breaking of support. So all time frames you're looking for that impulsive breakdown of support and that close. Look for volume to confirm. You want to see increase in volume, preferably more than average volume to help confirm that. Okay, so triple Qs, I think we're heading down to this 298. But again, on the daily chart here, we don't have that impulsive breakdown. We did have a sell signal right here. That looks like a pretty impulsive breakdown. So that's the sell signal we're really still trading off of. So you got the sell signal there, you got the back test, and now we're starting to kind of drift sideways, kind of down basically. So I think we're going to head, continue lower. Probably not today, but who knows? Might be next week. Let's look at SPY here. The one thing about SPY, let's go to the hourly, and we'll see how this closes. But the SPY is broken down again from this trend line. So here's the price channel on SPY right there that it's been in since November. Been walking up that. You got the breakdown here, but this took place during the holiday, really thinly traded market week, and I pointed that out in my videos. I'm not really interested in breakdowns during the holiday, kind of random breakdowns with no news. Just it's whippy, so I didn't trust that one and take that one. You got it again right after the holidays. Looked kind of good, but they recovered it, and we're getting another breakdown today. So that's 3 basically. We'll see what they do. Is it another whipsaw and they recover it? Yeah, we'll see. Pointed up as of right now, so it might be. If this one sticks and it does break down and you see more selling maybe into the close today, then I would really look for these lows to be your next level of support right down there at about 362. A break of that, and I think we head down to about 350, about 351. So those are some short-term levels to watch. IWM. So IWM broke. So here's the trend line on the hourly chart. It's been walking up this right here. We broke it, and then it's just been trading really just below that trend at resistance, but with no real sell signals or no impulsive breakdowns. So again, we're just still in that price action. And so, yeah, I'd want to wait for some sort of an impulsive breakdown. Oh, going back to the SPY, the other reason why I think we're going to break down, maybe it's not today. This so far looks like they're stepping in and buying it, but big negative divergence that just remains. This is since September, and that just continues to remain. So until this gets taken out, this negative divergence, this is all set up bearish, and so we're looking for that impulsive breakdown, looking for that sell signal. Let's see what bonds are telling us. And I really do prefer recently to look at the long term, the long end of the curve. This is the area where the Fed's not as heavy-handed over here in the long bond. They're more on the short end of the curve, so they're looking at like the 4-week T-bills, the 6-month, the 3-month, the 2-year, things like that. The long bond is a little bit more free market, and so it can give you, this is where I prefer to look for bond market signals right now with the Fed manipulating the short end of the curve. The long bond is not catching a bid today, so it tells me, it is slightly up. So yes, it is catching a bid, but it's not impulsive. It's not big money, movers, going into the long bond looking for protection. So I just don't see anything in the bond market yet that's telling me, that's giving me any clues yet. But if you look at the daily, what I'm looking for is potentially another sell-off in the bond market. Rates will rise up and we'll put in bullish divergence on the daily. We don't have bullish divergence yet, so I'm kind of looking for that. Until we get that, we'll see. We'll just continue to watch this. Let's look at gold. Gold continues to hold support. Let's look here. You can see here we just dropped right to support. We've just been there all week. So gold's really flat right now. I don't see any signals I don't see any breakout signals that this wants to hold. I don't see any breakdown signals. So ultimately, I'm just waiting for a move in gold to tell me which way this thing wants to go. But let's look at the dollar, because I think this is probably one of the most important charts that most people should be looking at right now. And I think this provides a lot of opportunity. One thing is, not a lot of retail traders are looking at the dollar. So if you're on this channel and you're watching it, then I think you've got you have an advantage or an edge over some of the retail money. And again, whenever you're trying to take a position, I think it's important to understand who's on the other side of your trade. All right, if you've got people that are taking a trade based on momentum and not looking at anything else, then you might be able to pick up signs that momentum is going to fade, and then you can take a trade against that, and you'll have an advantage. Doesn't mean you're going to be right, but you have at least some more data points to base your trade off of. The dollar's rising. Now, we haven't broken out yet. What we're looking for right now, I think, is a break above this level, a close. Right above there. You can see it. We just haven't got that close yet, but it's right about 90.72. Look for that hourly close above this level. Once you get that hourly close above this level, it's likely the algos and stuff are going to start firing sell signals, start firing sell orders, based on the fact that the dollar's rising in value. Again, I've talked about this in several videos. The stock market rise has really been based on the dollar falling. It's not based on earnings getting better. It's not based on, it's not based on it really anything. It's just based on the fact that the dollar has been falling. So the dollar's been falling since the Fed came out back here in March, and it's dropped, and the market has been rallying based on that. And that's why commodities have been going up. That's why, basically anything priced in dollars has been going up. The emerging markets have been going up, doing well because they're denominated in dollar debt, basically. And so it's a dollar weakness trade. That's basically what this is. I'm pretty confident of that. And so dollar strength, it should start to unwind that trade. So again, look for that hourly close above here. If we get it, it should be impulsive, and you want to see that impulsive hourly close. That would be a buy signal on the dollar and probably start to trigger some of these sell signals in shorts. One thing that tells me we're going to get it, gold already saw the rising dollar and already took action. So here's, gold sold off from 1955 down to 1830 pretty impulsively already. You already had the reaction in gold. So gold wasn't anticipating the dollar rising. And obviously that's what happened. The dollar broke out. Here's your trend line in the dollar going back to November. Here's your downward trend line. We had bullish divergence. If I go to that hourly, you can see there's your bullish divergence. Really, it's an extended one, and we got a more acute or sharper angle one right there. Bullish divergence, bullish falling wedge, and a breakout. So there's your breakout. Come up, hit the first levels of resistance, do a little zig and zag, and then looks like we're continuing higher as of right now. So again, we're watching this level. If this breaks higher, I think that you're likely to see a pretty swift sell-off in the markets. Now, the one thing is, and I pointed this out, the markets haven't caught wind yet. They're still kind of trading in la-la land. You've got a lot of retail money in here. Again, they're not watching these things. So retail panic sells after major selling has already taken place. They panic sell, and they're historically long at or near the tops. So I think the retail is not going to sell until after it's completely obvious. And again, so we're looking for signs ahead of that. We want to front run that move is ideally what we're looking for. We want to front run the retail mania to the downside. Gold miners, so if we get that dollar rise and gold maybe has one final leg down, I think that's going to set up for what looks to be like a good long-term buying opportunity in these miners. So I'm going to continue to watch these. I'm not extremely bullish on these miners yet. I'm moderately bullish right now. But to be honest, what I did yesterday is I sold my Barrett Gold position and I kind of tapered down. I had too much risk in the miners. I took some down yesterday because I think this dollar is going to break higher, and that should trigger the miners to go lower. I think there's going to be a better buying opportunity in these miners. So could be wrong, but that's what I see right now. Let's look here at financials. All right, this is an important one. So financials still hanging in there on the XLF. You can see here we're kind of hanging in there about 30.62. A little bit of a sell-off today, about down 1%. Nothing crazy. So I don't see anything there in XLF right now that's telling me you got a sell signal or anything like that. We don't have negative divergence on the daily. So nothing there. But if you look at something like Citi, which is, this one's playing out pretty much exactly like I expected. It doesn't mean it's going to continue, but today we're getting price action that's verifying my thesis here. And so what do we have in Citi? Well, on the daily chart, we have negative divergence right there. Boom. All right. On the PPO, let me expand that. We also have negative divergence right there on the PPO. I don't have it marked out, but it's right there. All right. So negative divergence on the daily chart. So all this price action right up in here is divergent high price action. The other thing is we had resistance sitting right up here. You can see this reaction, this former reaction kind of right in here. I suspect it probably extends, but anyways, it's right there, former reaction, and that was about at 68.59. Yesterday, they popped it slightly above it, and I talked about, the fact that this was going against me, but I wasn't going to stop out till we got up around the 70, what was my level? I can't quite see it, but it's this blue line. It's about 70. Let me see if I expand this chart, if I can get it. I don't. They always have this USD thing right there that just makes it. There it is, 70.82. And that was, a daily close above that level. That was kind of my stop level. So obviously we could still hit that. We could reverse here and head higher. Completely possible. What to me looks like more likely, given that we have negative divergence on the daily, signaling a trend reversal is likely, is a gap down from here. I think we're going to hold in this area. Maybe a few more days or maybe just today. I don't think we're going to go much lower today. I think we're probably going to just remain in this area. And then we're going to wake up one of these days to a gap down to this 61.89 area. Doesn't mean that that's going to play out, but that's a likely scenario. What will that do? Well, that will create a island cluster top reversal pattern. And that traps in the bullish money that was bullish up here and creates that reversal pattern that I think we're likely to see a trend reversal. All right, that's what these divergences are telling me, that we're going to have a trend reversal. You just need that catalyst. That catalyst would likely come on a breakdown or a gap down. I don't know what the news event will be. Maybe it's something out there, but the pattern that's setting up is a gap down to create that. And then we start to roll over. Let's look at these oil stocks here, and I pointed this out in the last few videos that it looks like we're close to resistance and probably going to reverse here. Again, here's XLE, the oil ETF, kind of the sector basically, and here's your island cluster top right back here. That should act as a level of resistance. And what I pointed out was typically you'll make it to the kind of the midway point. So what I did is I marked out this breakdown candle as the midway point right there, 44.64, or it's about 44.70, and then mark that out as an area I thought it was likely for us to get rejected at. So you can see so far we basically whipped above it and then sold off and closed below it, and today we are continuing to sell off. The dip buyers are coming in a little bit, but again, I think it's likely that this is going to prove to be the top of this trend. We have negative divergence right there on the daily, and so I'm looking for continued downside price action. Again, likely to come with some sort of market catalyst or some market sell-off. We're not seeing it obviously today, and I don't think we'll get it today, but we're going to watch this. And then looking at like XOM, same deal. Island cluster top right here. They popped it basically right up to right into the cluster. This is very common when you get these island cluster reversals. You'll get the breakdown, but then you'll see a back test or kickback rally where they'll move it back into the cluster. Well, this was a nice impulsive sell down, and then they moved it right back into the cluster. So if we continue to reject here, nothing's to say that we can't go higher, because we obviously can. But if we continue to reject here, then I think we're going to start to see this thing come down. Looking at the hourly, where do we go? Well, I think we head down on this one, probably down at least to right there, which is about 41.07. That would be a drop so far, or of another 15%. I think we're likely to get a reaction there, so we'll watch that. Okay, I'm seeing a lot of bending in the markets, and a lot of these charts, I'm seeing a lot of bending, but I'm not seeing the breaking yet. So just to kind of point what I'm talking about is an example right here on Snap. We've got this bearish rising wedge. We chopped to the upside twice, failed so far, and we've come right back down to support. We're bending, starting, we're down here at support, but we haven't broke. So we've got the weak price action way up here, heading right down to the bottom of support of this bearish rising wedge, signaling we're likely to break down, but we haven't broke yet. So bending, not breaking. I'm seeing a lot of that in the markets where we haven't done the technical damage to the support or to the bulls yet. It's just not there in a lot of these charts. So we're going to continue to look for it to show up. I don't think it's going to show up during the market hours. The market, when it's this extremely euphoric, isn't going to give all the bulls just a nice, clean opportunity to say, hey, this is the top. Go ahead and take your money. Everyone will make tons of money. It's not how it works. First off, not everyone gets to make all the money that they have right now. A lot of people who are extremely bullish and have made a lot of money, they're not going to get to keep it. Some will, some won't. But when the selling starts, there will be a mass exit for the door, and the door is a lot smaller, so that's just how that works. Run here, another sell-off. This one, I think I'd prefer to trade these solar stocks in a different way than this run, because I can easily see because it's such a euphoric stock and we're selling off, but the dip buyers could step in and just pounce this thing all the way up for another back test. So I'm not really interested in shorting this thing unless I can get it really close to risk up here at this broken trend line right here. The trend line is broken, and we broke right here, but you can see back test. We back tested there. If it does another back test all the way up here around 1010, 109, that's where I'm interested in shorting it. And otherwise, I'll probably just let this thing do its thing. There's other opportunities to short, like TAN, which has not broken down. Here's the upward trend line right here in TAN. This is a solar ETF, and you can see it's still above trend. It's still bullish, basically. So I'd rather short that on a breakdown of trend. And if we break, I think we're likely coming down to this 58 area. We have negative divergence right there, but we haven't broken the trend. So the sell signal would be an impulsive breakdown of this trend line on the daily chart. This one, because it's pretty hot, there's a lot of speculation in this one. You might have to step in on an hourly breakdown, but looking for a nice impulsive hourly breakdown will probably be, that'll be the sell signal I'm looking for to establish a short position in this one. This is interesting. Walmart. Walmart has the potential to be setting up for a pretty good swing short that I see in it. Let me point out what I'm seeing, and I might take the thing is Walmart's not a huge mover, so it's not, it's not something that is going to move, huge. It's a relatively big company, but if it's trending to the downside, then it could be a good short. Here's what I got on this one. Big bearish rising wedge in this going back to 2015. So this is a big pattern in Walmart all the way back to 2015. And it continues to just, it continued to make this wedge. And then they broke the bearish pattern to the upside. And they did this a lot of this was done on kind of news, where Walmart floated out news on that they're doing certain things online. And it was all based on the online pump around COVID. And Walmart wanted to participate in that, so they floated out some online news stuff too. Now you can see, so what that did is that we ramped up, and then we created this what looks to me like a secondary support line right here from the lows. This is from the COVID lows, the March lows, and then we recently just broke. So there's your breakdown right there. It's pretty impulsive because you can see several days of selling, and then they did a full back test, and now it's impulsively rolling over again. So you can see the downward price action is pretty impulsive, where it's just all selling, gapping down, and we had negative divergence in this thing, complete and pretty clear negative divergence. So what this looks like to me is we're going to come down to this support line down here at about 129 or 130, depending on when we get there. From there, we'll likely, have a bounce, some sort of reaction, and then consolidate a little bit and then roll over and actually undercut and start to break down to the downside in this bearish rising wedge pattern. So if that's going to happen, then what you want to do is take the projected target area, which is the widest part of the wedge, kind of scroll it out. My line gets a little messed up, but it's about right there, and that would be your forecasted target basically. So it's about 85, 86. So about a 50% drop, a little less than that, but that's what I'm seeing in this one. Doesn't mean it's going to play out. Obviously, there's a lot of things that can go, change, but that's what it looks like as of right now. And obviously, that's a pretty, that's a good sized move. So that's a bear market move, and a longer term thing. This is another bend not break chart pattern like Nike. So on Nike, on this daily chart, you can see we have this bearish rising wedge. Broke it to the upside right here on earnings, and then they made another move to the upside, but both attempts above this bearish pattern have failed. And then today you can see it basically gapped down, and it was started to break to the downside, this bearish pattern. If I go to the hourly chart here, you can see they're bouncing it back and recovering it. So it looks like a false breakdown, and this is an example of a bending not breaking. So it started to bend to the and looked like it was going to break, but then the dip buyer stepped in and bought it back up, and it's back above support right now. So not ready to fully break down yet, and we've got to wait. Again, I think it's likely when you get the breakdown, it's likely to come in the form of a gap down. So I think we'll probably gap down to about this area, 136. Let's see how far down that is from where we're at now. It's a gap of about 3.5–4%. That would be reasonable for a gap down, and that's likely going to come if you get a sell signal across the broader market. Looking at the daily, big negative divergence. This entire wedge action right here is a bearish rising wedge, bearish pattern with negative divergence. That tells me we're going to break down, but we don't have that sell signal yet. It's not, you need that impulsive breakdown to trigger a sell signal, and we just don't have it, so we got to wait. Okay, guys, so just to sum up this video, I'm going to put it, and then I'm going to get it out there. Watch King Dollaaaar, all right? That is going to be likely our tell that the market is going to have a pretty good sell-off. And so, you can see right now we're just starting to break above. This hourly candle just started, so we got to see that hourly close above this area around 970, and then that should put you on high alert for looking for sell signals across whatever stocks you're tracking or whatever. But I think it's likely. There's definitely a higher probability that we're going to get a sell-off, and that the dollar is going to rise. Again, remember, there's a lot of shorts, and there. I think it's something like an all-time high short position in the dollar. So everybody and their mom is shorting the dollar because they think the dollar is going lower, and that's a setup for a short squeeze. Basically, you short squeeze on the dollar moves higher, the markets are going to come down. So keep an eye on that. All right, and that's all I got for today. If you guys are interested in learning how to use technical analysis to find trade ideas and use the charts to be able to read the charts, take my course. It's in the description below, and it should really help you with understanding my videos, and these videos will really be supplemental to the skill set that you're able to learn. So thank you, and I'll catch you guys on the next one.